Assalamualaikum warahmatullahi wabarakatuh. I'm INDAH LESTARI. I'm IPAcc student 2016 and I'm joining sector public accounting courses now. I will present about financial accounting of public sector organization and the role of information technology and human resources. The financial accounting system can be distinguished based on what is the object of recording and the transactions are recorded and how transactions are recorded. Financial accounting system based on listing object. The object of recording financial accounting is an transaction or event, and it is divided into three types. They are budgetary accounting, fund accounting, and accounting for commitments. Budget accounting is accounting techniques that record transactions and events occurring in the budget, starting from the time the budget was passed, allocated, implemented, until closed at the end of the fiscal year. And how to record budgetary accounting? First, we record at the time of budget approval for the fiscal year. On the income side, we put estimated income on the debit side, and then the surplus or deficit on credit side. How we record on the shopping side, we put surplus or deficit on debit and shopping appropriation on credit side. Now, record at the time of budget allocation for a particular quarter. We put estimated revenue allocated on the debit and allocation of estimated revenue on credit. When the shopping side, we put allocation of shopping appropriation on debit and allotment shopping on credit side. Now we record at the time of notification and realization. We put on the income side first. For income side, on the debit is allocation of revenue estimates, and the other side is the revenue bill. And at the time of receipt of income, we put cash on debit and income for credit. For the last of budgetary accounting journal, we record on the shopping side is pre-encumbrance of goods or services on debit side, and then allocation of shopping appropriation on credit. After that, we put goods or services encumbrance on debit and pre-encumbrance of goods or services on credit. And we record when goods or services are received or shop for goods or services on debit and cash on credit. For the last of budgetary accounting journal, we record on the shopping side is pre-encumbrance of goods or services on debit side, and then allocation of shopping appropriation on credit. After that, we put goods or services encumbrance on debit and pre-encumbrance of goods or services on credit. And we record when goods or services are received or shop for goods or services on debit and cash on credit. Next is fund accounting. Accounting for funds is an accounting system that limits funds for a purpose, and certain entities are divided into entities for other entities based on the intent and purpose of a fund. Fund accounting divided into two. First is single accounting entity. This entity is used by profit-seeking enterprise, and the second one is multiple accounting entities. This entity is used by public sector organization. And then accounting for commitment. A commitment accounting system is an accounting system but is used as the basis for taking operational management decisions or commitments. Accounting for commitments has two types. There are bill commitments and liability commitments. Bill commitment, which is a commitment that will be received by a bank from another party, and liability commitments, which is a commitment given by a bank to a customer or another party. Next is about financial accounting system based on when listing is done. In general, public sector accounting uses the cash basis in the accounting recording mechanism. This is due to the strong influence of the budget, which is the main information need of users of public sector organization financial statements. First is cash-based accounting. Basically, the application of accounting is the cash basis environment is primarily to produce reliable and complete information on aspect of cash transaction, cash savings, and short-term debt position from the budget of public sector organization. Cash-based accounting has relative simple characteristic and is easy to administer. The second is trends in using the accrual basis. Cash basis and accrual are the two endpoints of a spectrum of accounting basis and possible budgets, and then accepted for financial reporting than for budgeting purposes. Next is purpose and benefits of accrual accounting. In general, the accrual basis has been applied in countries that have previously carried public management reforms. The key objective is to hold managers accountable from the output and outcome, and at the same time relax control and input. In this context, managers are asked to be responsible for all costs associated with the output or outcome they produce, not just in terms of cash disbursement. Therefore, only an accrual basis makes it possible to recognize all the fees, thereby supporting efficient decision making by managers and effectively. Next is financial position. Accrual accounting is needed by the organization to maintain complete records of assets and debts, thus facilitating better asset management, including maintenance, asset replacement policies, excessive assets identification and reduction, and better risk management such as loss of assets due to stolen or damage. Next is financial performance. Accrual accounting provides information and opinions expenses, including the effect of transaction whose cash has not been received or paid. Accurate information on income is essential for assessing the influence of taxation and other income on the organization's fiscal position and in assessing long-term loan needs. The risk of implementing cash-based accountability can be anticipated with the use of accrual-basis accounting accounts with the following rules. Recording of economic transaction is carried out at the time of occurrence, both related to non-cash and related to cash receipt and payments. And then we talked about a financial accounting system based on how records are carried out. There have three. First is single entry bookkeeping. The second is double entry bookkeeping, and the third one is triple entry bookkeeping. The first one is single entry bookkeeping. Single entry refers to the method of managing accounts about in a simple way that does not follow the principle of the double entry system. Under this system, only use a minimum account, which is considered important cash book and personal account of the debtor and creditor held. The financial accounting system can be distinguished based on what is the object of recording, when transactions are recorded, and how transactions are recorded. The following are the special features of a single entry system. Is they are not suitable for large operational activities, only personal account and cash account, and implement account, and the variation are also flexible. The second one is double entry bookkeeping. The presence of accounting records with the double entry method provides the concept of understanding that each transaction must be recorded with peer records. And the last one is triple entry bookkeeping. Namely, the transaction recording system used double entry to generate accrual basis financial statement and at the time also recorded to produce cash-based budget realization reports. Triple entry bookkeeping recording is strongly influenced by the use of the case basis in the budget realization reports, which is the main report needed by users of public sector organization financial statement. And then the role of information technology and human resources. Information technology is defined as the technology used to manage data, including processing, obtaining, completing, storing, manipulating data in various ways to produce quality information, namely relevant, accurate, and timely information, which is used for personal, business, and government, and is a strategic information for decision making. And I think only this is that I can share to you all about this material, and I hope you can enjoy this presentation. Thank you for your nice attention. Wassalamualaikum warahmatullahi wabarakatuh.